Start off with putting the focus on earnings and on pharmaceutical names. Morepen Labs has posted a stable set of numbers for the March quarter with a profit up almost 2.5 times at 7.7 crores. Selling and distribution expenses have doubled, in fact, to almost over 10 crores, and that has kind of robbed the sheen from the margins. To help us get a fine print of the earnings for the quarter gone by, joining us on the phone line is Chairman and Managing Director of the company, Mr. Sushil Suri. Mr. Suri, it's good to have you on the show. The profit is up 2.5 times, but that's because in the last year ago quarter, there was an exceptional expense of almost 4.4 crores.
Yes,
now, if I take a look at the total income, that has gone up, but so has your other income, which is at 2.7 crores, and your EBITDA is a little pressurized by the selling and distribution expenses this time. So take us through the broader numbers, and then we'll delve into these line items individually.
That's fine. I think broadly speaking, as you would see in the results, the top line numbers are certainly moving along with the market because the ultimate target is to have better reach in the market. On a consolidated basis, we have added 101 crores to the top line from 486 crores last year. We have at 587 crores this year now, which is a substantial growth, I would say, in the today's market. We have grown by 21%. But obviously, once we are growing at a fast pace, we are catching new markets. We have to invest in the new market. We have to appoint more agents. We have to have, I would say, new customer acquisitions in a modern language. So naturally, the selling and marketing expenses have gone up. Primarily, it is because of exports. So exports have jumped around 19% during the year. Around 72% of our business of API is exports. So we do not have much, I would say, selling and marketing expenses in domestic market where we have branded sales, but primarily on the exports market. Now coming to the product-wise, if we get into the categories of APIs, API contributes 64% of the top line as a company. But within API, again, 72% is exports. So primarily we are a hardcore API company, primarily focused on exports. Loratadine had been our forte since last 15 years now, so which has shown very good growth this year also, around 13% year-to-year basis. Last year and last few quarters, we have been discussing that we want to clock 100 crores for Montelukast, which is an asthma drug. So thankfully, with the effort of the whole team, we have been able to clock 100 crores for Montelukast, which has grown 34%, which is very good. So keeping our focus on cardiac diseases and other lifestyle diseases, atorvastatin is one blockbuster drug which we are sitting. So this year, 17 and 18, the patent expiries in US are due. So we are hopeful of expanding atorvastatin also, and we want to take atorvastatin also to 100 crore mark during the current year. So then the next thing what we are betting big and which is showing good result is rosuvastatin, again another new statin, which has grown by 84%. So net, if we see it is statins and the diabetic range which we are focusing, and we are getting good results. So 340 crores only API sales, that is what Morepen's quality and research means. So more and more focus is on the backward integration, more and more focus is on the innovation of new products, and of course domestic market. Then the second sector which we are focusing heavily is in the diagnostic sector. Home-Diagnostic, which is direct to the consumers. So there are many companies who were earlier focusing on the hospitals also, but we are the only largest company in the country who are directly going to the consumers. Primarily the gluco and the diabetic and cardiac. So gluco is gluco monitors. So we have grown by 40% on year-to-year basis, around 47 crore single item, which is gluco monitors and the strips. So we have a base of 1 million users now, and we are selling almost 50 million strips every year. Last year we sold 48 million strips, which is a good presence in the market, and taking word from you, it's a very good stable business now. So we have a user base, and it is like a annuity we will get. So we'll keep installing new gluco monitors, and we keep getting business of the strips. Second category in the diagnostics is BP monitors, which has grown by 29%, which is also, I would say, fundamentally in our motto of lifestyle diseases. Basically, we are focusing on cardiac and diabetic, both in case of API also and diagnostic devices also. Then there are other devices, BP monitors, and then there are those thermometers, weighing scales, heating pads. There are 20 and other things. The good point which you might notice in the results is that finance cost is going down year to year and quarter to quarter. And this is the last year we'll have a major finance cost, and first quarter of the next year we'll reduce to zero. By June of 2018, we'll be a debt-free company. That is the main event for the company. Since 2006-2007, when the CDR of the company was approved, almost 10 years now. So we have been complying the CDR norms and repaying the loans, and the company was not in a major expansion mode. So whole focus was to clearing the debt first. So with the help of all the banks and with the help of and support of all the markets, we have been able to, I would say, come to the end of the tunnel now. Around 40-45 crore debt is left, which will be cleared within 1 year from now. And as we talk 1 year from now, we'll be able to say that, okay, we are a debt-free company. So that's a major event, because Morepen had been in debt for long, and we had gone for long restructuring. We had our own set of long-stranded, I would say, debt restructuring, but thankfully everything is behind us. And as I told that we are focusing on exports, parallelly the whole focus is on reducing the import content also, going in line with Make in India campaign. So in diagnostic sector, we are focusing on manufacturing in India. We have already started manufacturing of glucose monitors in India. BP monitors are under the plan, and thermometers we have already started manufacturing. So more and more exports and less imports. Those are the two things as a company as a whole we are working upon.
Right, that was an exhaustive explanation of an all-encompassing business categories. Mr. Puri, if you can, Mr. Suri, if you can also take us through, you were talking about certain patent expiries in the US and atorvastatins and other drugs associated in the same line. So will you be making an entry post those expiries? If you can share some numbers with regard to the bump up that we'll see post those patents expire?
Atorvastatin, for example, we already have DMF, we already have few customers lined up, but since Ranbaxy was the first to file and there was some settlement in the courts at that time, so the major patent had expired, but there was some collateral patent which are expiring in 2017-18. So once we have a generic market opening up, then naturally the boom comes up. So we had a long wait. We have been working on this product almost 11 years now. So once the generic market comes, of course the prices certainly go down, but India is competent to fight the price war, and we will be able to get a good share, if not, I would say, large numbers. So looking at our size of company, we are a 500-600 crore company. So we can easily double our things even if we get few percentage, even if we get 2%, 5% market share. So it's a large drug, around $20 billion. So that's one atorvastatin. Rosuvastatin is one which is a future potential, but we are not adding any numbers in our guidance today. So we're keeping a typical guidance of 15 to 20% growth, which we have been achieving consistently.
Right. Mr. Suri, in terms of the EBITDA performance in this quarter, and one of the important things is the selling and distribution. So you said it's more focused on exports, that is why it has gone up, but it's become almost double compared to the last year, and it's in the last quarter also it was 6 crore odd, now it's gone up to around 10 crore. So what my
deals with me, but broadly speaking, there are two or three different heads, I would say. One, of course, is when in the domestic market we promote the products in the OTC category, we promote product in the formulation category, and third is we have opened a chain of health stores, heart and wellness stores. I don't know whether you noticed, we have a heart care center first heart care center in Hoskas, which is again more of a, I would say, advertisement and promotion related thing. It's a new concept in India, which we are calling Heart Nation on Wellness now. So it's a non-invasive way of getting your heart treatment. So you don't have to go through surgeries, and we promote so many other things, and there's a special treatment which is a US FDA patented thing, ECP, external compulsive pulsation. So basically the whole point is that we focus on the non-invasive treatments. But all said and done, coming back to your query, there are investments going in these sectors. And then on the export front, we are exploring new markets. For example, Iran is new market which we have explored in last 2 years. And in year to year, we say major exports are coming, a large amount of exports are coming from those markets. So when we enter the new markets, we have some intermediaries, we have some agents naturally, and there's an upfront cost which we have to incur. That's one it is. Once the business is stabilized, it will go down.
Mr. Suri, what are the new export markets that you are toying with, or that you are planning to make an entry into, and how does current portfolio look like?
As on today, the major focus, I would say, had been, on the US market and European market. But as the patent regime is getting tightened and India market is, I would say, becoming more and more robust, we are getting good entries into African markets. We are getting entry into Iran. Iran was a big market which was lying silent. It has opened up now. South African market is coming up on the way. And major is we are getting very good response from Japanese and Chinese market. Japan, the entry barriers are very high, but as we are going forward, we are getting very good response from Japan, and the prices are very good. So we are getting our product registered in China also. All the major APIs we are getting registered in China. So major volumes would be coming from China, Japan, and the European market. East European market is very good, but the volumes are very low.
Right. And if you can give us guidance in terms of the net profit growth, because since you say that the company will become debt-free by June 2018, the return on equity, I'm assuming, is also likely to go up in terms of the ROIC as well, and in terms of profitability. So I'm just trying to understand that there are some kind of re-rating prospects that lie ahead of us maybe in the next 1 year as these patents expire, as your API share grows, and as exports commands a greater portion of the P&L, with debt becoming zero and interest costs also reducing.
Look, I will not be able to give you precise numbers on the ROIs and return, but primarily speaking, when I say that the company becomes debt-free, so it means whatever is EBITDA is coming to on the table, whether it is 70 crore, 80 crore, 100 crores, that is available to the company for growth. But last 10 years, we have not been able to expand into new, I would say, products. We have not able to expand new capex or any new facilities. What we were trying to do only a conservative, just stay put route. But once the company is out of the debt and we have free cash flows in our hand, we can invest on R&D, we can invest on new products or new projects, I would say. We can do capacity expansions, which we have been avoiding last few years. So that automatically adds to the top line, that automatically adds to the bottom line. So indirectly, a free cash flow would help me grow at a speed which we have not been doing earlier because we had limitations that we are under CDR. Our first priority is to clear the debt. And we are grateful to the banks for supporting us so long.
All right, Mr. Suri, on that optimistic note, we're going to leave it at that. But thank you so much for taking us through the broader contours of your quarterly numbers. It seems to be an extremely stable set of numbers and also in line with the plans that the company has going ahead as far as the API share of revenues is concerned, and also diversification into other categories and exploring newer export markets. Mind you, the company will become debt-free by the June of 2018. That's the key takeaway from this interview. And also they're exploring ideas of the Chinese and the Japanese markets apart from US, Europe and Iran already.